Sure, at least we had a bit of a debate there.
Yeah.
I mean, how's Lonmin, of course, a huge knock to the share price, down 13%.
Yes. Yeah, no, look, this is not good news for anyone, quite frankly. The rand has weakened on the back of this, what's happening at Lonmin. There's unquestionably, that is the reason behind the rand weakness today.
Yeah.
So this is just not good news. And this is the fundamental problem in South Africa, is no one trusts anyone. Labour doesn't trust business, business doesn't trust Labour, government doesn't trust business, business doesn't trust government, government doesn't trust Labour, Labour doesn't trust government. This is the underlying fundamental problem in South Africa.
It's very worrying, and it's worrying how the world is now perceiving South Africa.
Yeah.
You wonder whether S&P is going to follow with the ratings downgrade, perhaps.
It's unlikely, I don't think so. Look, the government's and the country's finances compared to other countries is actually in quite good nick.
But the structural problems have
Yes.
been highlighted by this.
Very much so, but I mean, we all know
Yeah.
this is not news to us.
Foreigners selling retailers today.
Yes.
Do you
Big.
think that it could have been sparked by what's taken place?
Clearly this is the spark, but it's not the reason. The reason is they've made a lot of money and these shares are expensive.
Time
So
to take
today-
money off the table.
Yeah, this might have been the trigger that made them do it yesterday and today and the day before, etc. But it's not the reason. The reason is shares are expensive and they've made a lot of money out of it over a number of years now. Now they're selling.
Well, I mean, your thoughts. We had Truworths coming out with their results
Yes.
yesterday. We've seen a negative reaction from that share
But
price.
Truworths' results were not good at all.
I mean, the share price is down 5.33%
But if
today.
you look at it, take out the extra week. Now, I've never understood why some years you have 52 weeks and other years you have 53 weeks. I mean, the year ends on the 31st of December, but let's not worry about that now.
It's all
If
very
you
strange.
if you take out the extra week
Yeah.
in their results were actually not terrible, but in relation to what the share price was expecting, they were terrible. In other words, they had turnover increases of 8.4%, but internal inflation is 8%, so they had virtually no growth in turnover, taking out the extra week, as I said. So these were
sales
not good results.
Aren't increasing, basically, if you take out the fact that
Yeah,
you strip out that price inflation.
It's actually incorrect of me to say these are not good results. They weren't bad results, but in relation to what the share price was expecting, i.e. a high PE,
Yeah.
these were not good. And you
And
take
so we're
Lewis
seeing
today,
the re-rating of the PE.
Lewis sales up 5% year on year. All in all, that's not bad, but the share price is expecting a lot more. So I think you're going to see significant weakness
Reality
in share
check
prices.
for all the foreigners who have been buying and all the locals smiling
we
today.
have been talking about this
Yeah.
forever.
Sitting smugly and saying, we told you so.
Yeah. But 2 weeks ago you looked like a fool if you took the statement because they were just going up.
Yeah.
So maybe a bit of reality. I'm not sure if this is a change because now for 4 years it's been retailers up, mining shares down, just getting clobbered. It's been a one-way bet. Now you've seen in the last year, all the local managers are saying, no, hang on a second. We're buying the commodity shares, we're selling the retailers, and you've looked like idiots. You've underperformed the index for a year or two. Maybe now there's something, because if this is a change, it's going to be a big one. It won't affect the all share index in total, but within the all share, this will be a seriously large move.
Because that's what's been feeling, the moves on the market.
You can think so, but I mean, I've also learned, don't call
Don't
it.
say anything.
Don't, one swallow doesn't make a summer.
Okay, so just very quickly on the construction front, another disappointing
Yes.
trading update
But the
coming
share
through
price
from
didn't move much
WBHO.
because it's expecting
We know
bad
margin
news.
compression there.
Yeah, we know
Your
this.
views then on the construction space. Are there any of those stocks that you that you would touch right now with
Look,
a long-term
you've got
view?
to be a brave person to go and buy them now, simply because the mood is just so totally and utterly against them. However, if the government only, and I've said this so many times again, if the government only delivers on half of their plan, so the government and Eskom and the whole lot put together, there's not enough capacity to implement half their plan. So in theory, the 5-year outlook and 3-year outlook for the building and construction.
But what
shares,
would you be doing,
I
Wayne?
would wait. I would wait until this thing turns, because every time a construction company comes up with a set of results, they say the government's delaying the infrastructure expenditure. And I saw some statistics the other day saying that 30% of government tenders are postponed or cancelled or aren't implemented. And that's up from less than 5% 4 or 5 years ago.
So we've got to question the statements that politicians make with regards to these bold statements of infrastructure spending plans. Wayne, thank you so much for joining us. Wayne McCurrie from Momentum Asset Management.